Although the slope is not steep, the direction of the market remains downhill. That is an exact quote, the latest from the Cromford Report. So we are talking about that today. What is going on in Phoenix real estate? We are also going to be talking about how they are saying that prices are going to have to adjust downward in order to get rid of this excess supply of homes on the market. And pending foreclosures are on the rise. We're going to take a look at that. So let's dive into all of this news this week. I'm starting off with showing you guys the CMI by city. And I don't usually start with this, but this is what we're doing today because I want to talk about their comment about a downhill market. So as you can see, there's a lot of red arrows here. If you're new to my channel, this is the Cromford Market Index. Basically shows which cities are in a seller's market versus a buyer's market and a balanced market. And anything with a red arrow means that between this month and last month, that city moved away from a seller's market and more towards a buyer's market. However, anything over 110 is considered a seller's market. So you can see here that everything above Avondale is still technically in a seller's market according to the CMI. Actually, I'm sorry, Glendale and above, because that's hanging in there at 111. And then we have a few cities that are in a balanced market, which is Cave Creek and Mesa. And then if you look at Peoria all the way down to Maricopa, all of those cities are actually in a buyer's market. Now we have a few green arrows, meaning that those cities moved in a direction more favorable for sellers. So even though Maricopa's in a buyer's market, month over month, the change was 8%. So it moved in a direction closer to a seller's market, although it is pretty far away from that right now. So if you're a buyer out there and you're looking at this chart, it helps you understand which areas of the valley you may have more of an advantage in. And as a seller, it also helps you understand if you have an advantage in your area or if you don't. Now, I will say most of these cities that are in a seller's market technically are still a fairly weak seller's market. So pricing is still very important. And this market right now is extremely price sensitive, not only because of home prices, but also because of mortgage rates. Therefore, as a seller, if you want to see success in the market, you really need to start with the right price, or at least a competitive price, and be willing to make adjustments early on when you are listed if you're not getting the traffic or an offer within the first month or so. At least you should be getting some good traffic within that first 2 weeks on the market. Now, this week, we just broke the trend of moving towards a seller's market. For the last 4 weeks, when we look at this month over month change of all of the major cities on the CMI, we were seeing that number move closer towards a positive range. And this week, we're seeing the month over month change actually go back the other direction, which is a little bit unexpected. We've continued to move into our spring selling season. We saw some downward movement with mortgage rates over the last month, yet this is moving in the opposite direction. So the average change in the CMI over the last month was negative 1.9%, whereas last week it was negative 1.5%. Like I said, the last 4 weeks, we've been seeing movement towards a seller's market, and now we are going back towards the buyer's market, albeit very slim, by a very slim margin, but we're still going in a different direction now. So this is why the Cromford Report is saying that although the slope is not steep, the direction of the market remains downhill. Now, if we look at where we're at with the CMI overall, this is across the entire valley. We're at 81. This is the lowest CMI we've seen since, I can't remember, 2011, 2009. I looked it up last week, so you can check out last week's video for that number. But either way, it's been a really long time since we have seen this number. And demand is only 20% below normal. Demand is really not all that bad. However, our supply has gone all the way up almost to normal. And so we're in a situation where our demand is not keeping up with the supply on the market, which is why the Cromford Report is saying that the market's current trajectory, pricing is going to have to adjust down to get rid of the excess inventory because we're just not seeing that demand keep up. So supply every single week, active listings have been climbing. Here we stand at 25,120 as of today. And if we look at last year, we were quite a bit lower. We were at 17,000. And then, of course, years prior, as the market has been really hot and we had low inventory, we were much, much, much lower. Now, for context, if we look back to a year like 2007, 2008, we still had much more inventory than we do today. Although we're now seeing this higher number of inventory than we've seen in a very long time, and we're not seeing the demand keep up with that. I was sharing the listings under contract, I think maybe last week or the past few weeks, and while this looks good because it's tracking along with last year, we have to remember that we still have way more listings this year than last year. Remember, so we're at 25,000 now. Today, or last year, we were around 17,000. Yet our listings under contract, which is basically our demand, is keeping on pace with last year's activity. That makes sense why we are starting to see a pile up in listings. We're starting to see sellers have to compete a little bit more on price. I wanted to see what's going on with price cuts on a weekly basis, and we haven't seen that much change. In fact, last week this went down slightly, but we did over the last about a month ago start to see this increase a little bit, and seeing these price changes taking place every single week. Now keep in mind, these are listing price cuts. So this is when a seller cuts the price of their listing in order to get a little bit more activity and hopefully reach the right buyer. So these aren't the sales prices, although this is where it begins, right? You start to see the list prices come down, the price cuts, and then eventually those sales prices will be lower as well. Now, it also makes sense for us to look at how we're tracking with new listings. So not just the amount of active listings on the market, but the new ones coming to market every single month. This month, we're at 7521, which is just slightly under where we ended the month of March in 2023. And last year, we were at 9140. We still have about a week left in this month. So whether or not we are going to beat last year, like we've been tracking every single month, it'll be interesting to see, because every month this year so far, we have beat last year's and the year prior number of new listings coming to market, which, makes sense as we're seeing more inventory out there. But are we going to make it this month? I don't know. We still have about 2,000 more to add before the month ends. So we'll check this next week and see where we're at. Now, Redfin is reporting that they are seeing demand picking up, but they are also saying that is just mainly like the home tours. That's not necessarily people actually getting under contract, writing offers on properties. They're saying there's signals that house hunters are stepping off the sidelines, even if they're not following through with a purchase just yet. The home buyer demand index is showing that it's at its highest level in 3 months, and showing time data, which basically reports on showings that are requested through the MLS, saying that it's rising faster this year than in 2024. Yet we are not really seeing this play out in the market, at least not in Phoenix yet. They're also saying that mortgage purchase applications are sitting at their highest level in 6 weeks. So this rising demand could translate into an improvement in pending home sales. However, I'm not sure, based on the things that we are seeing in our market right now, if that is actually going to pan out to be the case. Now, I can say, for whatever reason, over the last week, all of my listings have seen more showing activity than they had been seeing the last couple weeks. Maybe that's spring break. Maybe that's just where mortgage rates have been. I'm not sure exactly what has made the change, but we'll see if that continues. Now, they are saying that on the supply side, new listings are up 5.5% year over year, which is the biggest increase in 6 weeks. So of course they're looking nationally, and we know what the supply situation looks like here in Phoenix. Now, what's going on with mortgage rates? So the Fed met last week and they decided not to cut the federal funds rate. We actually saw mortgage rates fall a little bit despite no rate cut from the Fed. And we had anticipated higher Fed rate projections, but these remained mostly stable, calming fears and lowering rates slightly. Now, in the coming weeks, we're going to get more information on inflation reports, jobs report. All of that will be crucial in determining future rate movement. If these reports show favorable conditions, it could possibly bring mortgage rates down. So you're going to want to keep an eye out on that if you are a buyer. Now, where we're at today with rates about 6.72%, we haven't moved all of that much off of last week, but that's about where we're at. Now, of course, as I've shared before, if you are looking to avoid today's mortgage rates and find something that is an assumable mortgage that They can be tough to find, but they are definitely doable. Check the description below. I have a link where you can find homes with assumable mortgages and download our guide that explains what that process looks like. Now let's talk about foreclosures. And before I get there, if any of this is helpful for you, make sure you consider subscribing or share this video with someone who might find it helpful. Okay, so I'm talking about foreclosures pending. I know in the past I've talked about the notice of trustee sale, which is the initial notice that a homeowner will get that they could go into foreclosure in the next 90 days. This is what's currently pending. And so the number in Maricopa County is very slowly creeping towards our number in 2020. So if we go back in time, you can see in 2020, before the pandemic started, we were quite a bit higher, but we're not too far off. Obviously, going back to 2024 was lower, 23, 22, 21, all of these years seeing much lower foreclosure numbers because of the market being the way that it was. But today, what we're seeing is this number is slowly creeping back up, more so to normal. Like you can see 2020, 2019 numbers. Now, according to the Cromford Report, we're sitting at 1283 right now. The lowest number that we saw of pending foreclosures before the pandemic was about 1800. And during the worst foreclosure wave in 2009, we had over 50,000. So to put things in perspective, we're not there yet. Yet we are seeing this increase, right, in combination with all of these other market conditions that we're talking about. So this is something we want to keep an eye on. Let's just see what happens with foreclosures. Now let's look at the contract ratio as well, where we're at. Not too much movement over the last few weeks. So we're at 36.1, which is technically in that kind of warm-ish range, warm balance area. Now, if we look at the heat map, you can see there's a few zip codes that have warmed up a little bit. This is considered hot in Chandler, 85226. We're also seeing Tolleson, 85353. A few zip codes up here in Peoria, Glendale, North Phoenix. So a few more zip codes that are actually showing some heat. And then we also have quite a few that are cold, which is more of those blue colors. Now, if you're a seller who is weighing all your options right now because this isn't the best spring selling season we've seen in a while and just want to have an idea of what your home value could be, check the description. I have a link for an instant home valuation that will at least give you an indication of what your home could sell for. Whether you're a buyer or a seller just trying to figure out what the next move is for you and what makes sense, you can always schedule a discovery call with our team. This is free. We'd be happy to talk with you and help guide you in the right direction so you can decide what the best course of action is for you. Thanks for joining me this week, you guys. I will see you next week on the next market update.